All right, Bulls and Bears, BX4, Bolt to the Bust, back in the building, back with another dose. Let's go ahead and get right into it, folks, without delay. The economic collapse just worsened. If you've been on this channel and you've been hearing all the information we've been putting out and all the financial situations we've been digging into and uncovering, you would think it couldn't get any worse. But just as I predicted many times, and as I've said here many times, things will continue to get worse. We just have retail store closings getting much worse, already surpassing the number of store closures that we saw throughout the year 2023. And we still have a couple months left in 2024. But even at this point, we've already surpassed 2023's store closures. So we're going to get into that and a lot more. Please make sure you're subscribed. And let's get into some other news here. Starting right here. Retail apocalypse here, folks. True Value declares Chapter 11 bankruptcy. Lines up sale. True Value Hardware. I'm sure many of you have heard that name here. If you see the logo, I think many of you will be familiar with it if the name doesn't ring a bell. And here's a look at it. For those of you that don't remember here, a store, a retailer that's been around for many, many decades, folks. Chapter 11 bankruptcy. Just another sign, just another red flag, another piece of the puzzle. If you're trying to figure out what's happening with the economy, this should be very easy to understand here. Consumers are pulling back on spending. So much debt right now. We're going to talk about more forgiveness programs, debt forgiveness, and other things happening a little bit later in this report. But even CNN came out with the following article. And here's how they put it. Consumers reach their breaking point, forcing retailers to shutter stores at a worrying pace. And I've got some other notes here as far as the number of closures. We have Family Dollar announced, 677 store closures this year, 2024. Walgreens, 259 store closures. Big Lots, we've talked about Big Lots a few times, 364 closures, not foreclosures, store closures. LL Flooring shutting down all of its locations. So far this year, we've got 6,189 store closures, outpacing last year's total of 5,553. So we're over, about 800 more already than we were in 2023. And the craziest part is we still have 2 months to go here in this year. That's according to Coresight Research. Chains are on track to close the highest number of stores compared to any year except for 2020 when we had the shutdown, the global health crisis, and everything else. So where's the recovery, folks? We were told we were getting an economic recovery or participating in an economic recovery after 2020. But as we look, the debt burden on most people continues to worsen. And the retailers are telling the story, folks. People aren't buying new floors online. Like the excuse a lot of times when stores close is everybody's shopping online. Well, we just heard from UPS last week saying package deliveries are down, indicating that even online shopping is seeing a big slowdown. And when you see a flooring company go out of business, you can't say that's online shopping. How many UPS people are delivering, pallets of new floors to people? Anyways, that should be an eye-opener if you already weren't on board with what's really happening with the U.S. economy here. Also, more restaurant closures. People aren't eating hot served food online, are they? So no, you can't blame this on online, folks. TGI Fridays suddenly closes more restaurants. And it gives a lot of them here, a big list here. 36 restaurants across 12 states. And folks, it's going to continue to get worse. The powers that be, though, the economic engineers, they're trying to help people as much as possible. We have programs out, massive number of programs. Here's just a couple of some of the latest ones and how they're trying to help people survive this debt here. All right, and there's hundreds of these that are out right now. New ones popping up all the time, every week. Here's one of the latest ones here. Rhode Island launches new medical debt relief program. Right? Why do we need all these programs if everybody's fine, the consumer's strong? Look at this one. An additional 60,000 public servants will have their student loans forgiven, right? Isn't it interesting how certain groups get picked out to get the forgiveness? What about all the other people with student loans, right? And I'm not saying that we should even get rid of any of these student loans debts, but when you pick certain groups to get forgiveness and other ones don't, it creates some a sense of unfairness to a lot of people. 60,000 public servants student loans forgiven. And take a look at this, folks. U.S. openings for jobs hit more than a 3.5-year low at the same time as consumer confidence rebounds. Pretty interesting. So nothing instills consumer confidence like a 3.5-year low in job openings, right? So is this wrong that consumers are confident? Well, according to the survey, they're more confident than they were because it did rebound. But why is it rebounding? Are people buying the economic narrative that's coming out of the financial engineers that things are going to get better? Or maybe they see some hope based on what might happen in November. Maybe they see one of these people, making things actually easier for people instead of continually making it harder for people. We'll have to see how it plays out. But it's interesting how consumer confidence can rebound at a time like this, with store closures again outpacing last year and the worst since 2020. But we're going to keep an eye on it here for you. Folks, Bitcoin over 73,000. And it's pretty interesting. We have the BRICS nations out there announcing they're going to be using Bitcoin as far as intercountry trade. And could that be a reason why we're seeing a big spike in Bitcoin? Or is big money getting out of the stock market now with all the news that's coming out and with all the risk that we see on the horizon? And are they piling into Bitcoin, like institutional money, the whales, as we call them, and investors? Well, speaking of investing, there's still opportunities to make some money here. Let's talk about just a couple recent ones here. We have Alphabet stock soaring as earnings crush estimates on strong cloud growth. Folks, I hold some Alphabet stock, parent company of YouTube. Of course, I'm a big fan of that. Surged 6%. Google's parent company, Alphabet, surged 6% after hours Tuesday as the company reported fiscal third quarter earnings that beat analysts' expectations and top and bottom lines helped by strong growth in its cloud business. Now, folks, unless something big comes in and derails this system of money and how money is actually created and pumped into the economy, we're likely going to continue to see inflation worsen. And you'll still see certain stores go out of business as consumers shift their shopping habits. But overall, as long as the banks keep lending, if people could continue to run up debt at the same time as getting their debts forgiven for certain things like the medical debt, as long as they can continue to get down payment assistance programs to buy homes. I read that Detroit, Michigan has a down payment assistance program, and that's one of the lowest priced housing markets in the country. One of the lowest priced housing markets in the country, Detroit. You've seen some of the homes in Detroit. I think I saw homes for like $5,000 at one point. They were fixer-uppers. They were dilapidated and, run down neighborhoods, dangerous neighborhoods, frankly. But, even in Detroit, where home prices are really, really suppressed, people need down payment assistance programs. That should really tell you something, folks. But when you look around at quote unquote experts or people within the financial world in the industry, you see a mixed bag. Really nobody knows what's going on, what's going to happen, right? Morgan Stanley CEO says the era of zero interest rates and inflation is over. So they're saying that the central bank's not going to go to rock bottom interest rates again. And they're saying inflation is over. I don't agree with that. I really doubt that. And at the same time, another recent article out of Yahoo, Wall Street bosses are more worried about inflation than the U.S. election. So we have a mixed bag of Wall Street bosses expecting more inflation, and it says here they're worried about inflation. Then we have people like this gentleman from Morgan Stanley, the CEO, saying that we're done with low interest rates and inflation is no longer a threat, or as it says here, inflation is over. So who do you believe? What do you believe? Right? Nobody knows what to believe. Nobody knows what's going to happen because this is an entirely controlled environment when it comes to the economy, when it comes to what's going to happen with the money. If more money's pumped into the economy, if banks are going to continue to loan out money and they continue to find new ways to forgive debt and help people buy things, then you'll continue to see inflation. It's pretty simple. If banks pull back on lending, or if banks finally get held accountable for all the money they're loaning out, even though they don't have the money to back the loans that they're giving out, if banks are ever held accountable and we see an implosion of the banking system, if they're ever held into account or held accountable, then you're going to see massive deflation and a crash and everything else that goes along with a financial market correction. Falling markets, falling home prices, everything comes down, folks, when the money stops. Not even stops, it just has to slow down. They always have to continue pumping money into the economy to keep this game going. Otherwise, it's game over. All right, folks, switching it up a little bit here, but more eye-opening news in my opinion. Volkswagen labor chief sounds the alarm on mass layoff, and 3 German plants are closing. Volkswagen, folks. Big slowdown in car sales. Volkswagen target layoffs about 10%. Pay cuts, folks. Pay cuts. Think about this. You're going to work. Inflation's eating you alive. You think you're going to maybe ask for a raise, or you hope you're going to get a raise, but you find out you're getting a pay cut, a 10% pay cut, if you're lucky enough to still have a job, because they're closing plants. And as we just looked at in the previous report, previous article here, mass layoffs. So if you don't get laid off, maybe you'll be lucky to still have a job, but a 10% pay cut. People aren't seeing 10% cuts in their rent or their expenses of hardly anything, folks. Folks, it's tough. And guess what? It's going to continue to get worse. Do you see anyone coming in and fixing this? Do you see an implosion happening? Anything's possible. We still have the possibility of a black swan. So brace for that, but also brace for things to continue. We've seen this happen in many other countries where hyperinflation was what eventually happened. When you continue to throw money at the problem, pump endless amounts of money into the economy because the money's not backed by anything. There's no limitations on it. You're going to see inflation, folks. All the countries that saw their currencies destroyed went through what we're seeing now. And even countries where people ultimately couldn't afford anything because costs kept going up, they still didn't see a recession even going into that type of environment, because all they have to do to hold off a recession is to continue to pump money into the system. Banks loaning out money, people continue to spend money, and that's all you need to give the illusion of economic growth and put out these false GDP, gross domestic product numbers, and then they can tell you on the news that the economy is growing because of that. But in the meantime, people are in record amounts of debt, and it continues to get worse. That's why we see all these debt forgiveness programs and everything else. Now, shifting gears a little bit here, but on the topic of housing, we love talking about real estate and housing here. The housing bubble, as many people would call it, much bigger than the one that went bust in 2008. Well, a big part of this is corporate and Wall Street investors coming in and buying homes after the collapse in 2008. Well, take a look at this. North Carolina members of Congress call for federal investigation into corporate housing investors. And what are they saying here? A federal investigation into the 2008 housing era crisis program that allowed institutional investors to buy large portfolios of foreclosed homes at significant discounts, folks. They encouraged investors to come in, even multi-billion-dollar companies to come in and buy as many homes as possible at rock-bottom prices. And that's why now you see the home ownership rate much lower than what it was in the 2008 housing bust and financial crisis. And people wonder why there's not very many foreclosures nowadays. With home prices so high, you would think there'd be a lot of foreclosures. Well, that's because less people actually own their homes now, a lot less. The home ownership rate is lower by many, many millions of people. So you have, of course, these big Wall Street investment companies less likely to have to file bankruptcy or face a foreclosure because they came in and with their billions of dollars of liquidity and purchasing power, they came in and bought thousands of homes. All right, so there you have it, folks. What do you think about this report today? Will anything be done about the cost of living. Will anything stop this? Do you see a black swan bringing this down, such as maybe chaos, maybe World War III? Right around the corner, folks. We have a little bit of time to prepare, but I would say buckle up because we're going to see some fireworks pop off here in the next couple weeks, if you know what I'm talking about. Please make sure you subscribe, come back for more news, financial updates, articles, everything else, right? Let me know down in the comments what you would like me to cover on here that I haven't already covered. I try to be very broad as far as the financial, economic news that I bring to you: housing, automobiles, inflation, jobs, everything else that goes along with the money that's in your wallet, right? So thanks for being here, folks. Keep stacking. Bye for now. Peace.